Hi, good morning everybody. Tuesday morning, please read through disclaimer. Let's look at the charts for today. Only 4 or 5 charts that I want to focus on. Do in-depth analysis this morning, so I hope you learned something. Please remember tonight at 7 o'clock, mentorship. 7 o'clock we will spend live sessions in the market. Right, so let's look at the chart that I'm concentrating on for today. First of all, New Zealand dollar Swissy. So this should be helpful for you. Let's explain to you what is the difference between a correction and an impulse wave. An impulse wave will have a move with a pullback or a correction, and then this third wave is an accelerating move. So it is much more steep than the first move. It is usually at least 1.618 the length of the first move. So then you know that you're an impulse, that the move is upward, that the trend is upward. A correction is only a 3-wave move, and usually the second wave or the second leg is weaker or slower than the first one. Then you know that you're in a correction. So let's look at the charts in front of us. That is the first move, obviously. This is the correction, and can you see how this move is slower than the steepness of this one? It's a little bit more flat. Now if you take the equal legs measurement, it will mean this move with a pullback will equal the second move. That is what is coming in there at the top. I've put it in a horizontal box here. That will be the target for our equal legs, but we can see that this market is slower than this leg. We can also see that it's a 3-wave move with an ending diagonal in wave C. In other words, this is the move with a correction, and now the second leg is an ending diagonal or an ascending wedge. 1, 2, 3, 4, and we're in the last stages of this. Now, because of the weakness of this last C wave, I do see this market only going to the 61.8% of the length of this move. That comes in at 65.35. That is the target for this, so there's a 180 pip trade on this. I do see this market as giving us one push to the upside. The reason being, we can see this is the whole correction here. This market, the third wave must always be the strongest wave. We can see it accelerating there, so it's very different than the bigger picture here. Remember this first diagram that I gave you? Can you see the acceleration or the steepness of the third leg here? This is also a pullback, and now we're basically in the last stages of this ascending wedge. What I do like about this chart, if you put on your RSI on a daily time frame, this I put on to help me, we can see that there is already divergence on waves 3 and 5. I don't think it's complete. I think we're going to have a 3 divergence. In other words, 1, 2, 3 highs and 1, 2, 3 lower highs here. I'm looking for a push to the upside. And why do I say this? Why am I not seeing a reversal as from the current move and say that this wave is complete now? Alright, so I'm saying this because of this decline is not an impulse wave. It's a 3-wave correction. And if I bring in my moving average, very interesting to see where this moving average is. Just bouncing on it, we're not upside or upward trend line here. I do see this market bouncing. So I'm looking for buying opportunities here for the market to go higher into the 65.20 area. And our stop losses at this stage is not a good risk and reward trade at this moment. It should be below these lows. So bouncing here, I'm looking for some reversal signals here on the New Zealand dollar Swiss for a push higher to complete this ascending wedge, and my target for this is 65.50. So there's the complete analysis of this chart. Right, let's look at the Aussie CAD. We're basically long in this. The reason being, again, look at this accelerating move to the upside. It's not slowing down, so this cannot be a C wave. It is a third wave, and I'm seeing this as 1 and 3. I'm connecting those two highs, just copying it to the lows. Look at this 200 moving average. The market is now in the equal legs box. I'm also see this as an ending diagonal, so it's an ABC move with a descending wedge now. If you put on the 400 moving average here, or the 4-hour 200 moving average, this line is just below us. In the leg box here, we've bought it already at 67.85, stop losses at 67, that's an 85 pip stop loss, but I'm looking at a 300 pip move on this. If you're not in this trade, wait for the market to break the wave 4 of this descending wedge. Then you know you're in the clear. This 200 moving average has also been broken. Stop losses will be below 97.78. So let's make it 97.75 just to be safe. Above there, the market is on the way higher, and I do feel we're going to parity and beyond. Aussie CAD. Pound Australian dollar. I'm looking to sell at higher levels, so there are a few things on this chart that I'm seeing. First of all, this 5-0 pattern. This is a harmonic pattern. The market is invalidated above that pattern, so everything below there is short for me. This 5-0 pattern suggests, now very careful here, because the market states, or the rule states of the 5-0 pattern, that we must sell it at the 50%. You can see that the market is already bouncing at those levels. It's finding support and now finding resistance. So this pattern is validated already. Stop losses should be above, but it's a huge stop loss. It's a 300 pip stop loss, and I'm looking for a move back to these lows, yes, which is 600 pips, which is fine. But I'm looking for higher levels. The 200 moving average is coming above us, coming down there. I want to sell at the 61.8%. One push to the upside, I will sell this. Stop losses above. Your other trading plan here is obviously to wait for this market to complete this. This will be a 3-wave pullback. 1, 2, 3 equal legs, maybe into this zone. Then you have a very good entry. I don't say we're going to get it. Let's see if we get it. But the other scenario is wait for this market to break down. So once this market is breaking this bearish flag, which is a continuation pattern, you know that the market is breaking and the market is moving, and you can enter it with maybe a smaller stop loss. So we have the bigger pattern that we can trade, stop losses above the invalidation area, or as we anticipate a move down, wait for the market to break down, sell the support levels, and put in lower stop loss levels. Euro Swissie here, very nice bullish Gartley here. It is also 5 waves up, 3 wave down. Everything is in line with the wave principle. Very good entry here. Stop losses are below 75.35, and I'm looking for a move much higher. This can be a very long-term trade into 110. So that's 240 pips to the upside. You've basically got a 30 stop loss. You won't get risk and reward trades like this very easy. Just something on the RSI that you can learn from. Let's just see here. Let's go to a 4-hourly chart. I've seen it earlier when I prepared the chart. If you are, yes, here we are. Use your RSI to determine when it is a correction and when it is an impulse wave. This is the bottom of the market or the end of this correction, 3-wave pullback. So let's look at this. There's the wave 1, 2, 3, 4, and there's the 5. Divergence between wave 3 and 5. That you can clearly see on the RSI is 1, 2, 3, 4, 5 swings. Let's look at the pullback, 3-wave pullback. Let's look at this, 3-wave pullback on the RSI again. So use your RSI to show you the market movement or the impulse wave or the trend, and use your RSI to show you which one is the correction. So we're in this trade long. I think if we can break above this 200 moving average at 108.10, somewhere there, we're in the clear with this trade. I'm going to keep this for the next few weeks and see if we can just take advantage of this trade. Very solid setup here. As long as 735 is holding, that is my only concern here. 735 must hold, but our stop losses are in. Another thing, last one on the Euro Aussie here, I want to look at selling opportunities close to this 200 moving average as well. I'm staying with this bearish market. I see this as the wave 1 and 2 of the black degree. Now within wave black there will also be 5 waves. Let's bring in our RSI. Now let's look at this. The RSI shows an extreme there. So this market shows you that this is a 3rd wave and this is a 5th wave of some degree. So if we put in a smaller degree within that, we can see that this is the wave count with an ending diagonal in wave 5, and this is one smaller degree as the blue ones, and usually I do this in red. Right, so that is the 5 waves within wave 3 blue. Our RSI showed us that this is the 3rd wave, and then now obviously we can look at this as the 3 blue. We're looking for selling the 4 blue. We want to sell this, and where do the wave 4 usually come in? put in your Fibonacci tool. It usually comes in at the 38 or the 50. That makes sense because our 200 moving average will be across those highs as well. I will put in that wave 1 low as my point of reference, put my stop losses above, and now I will drop to a smaller time frame, and let's look at this quickly. So I'm looking for a fourth wave correction here to sell it in that box, and I can already see that the market is giving us some sort of correction. I'm looking for one push to the upside to sell it into this 59 area. Stop losses will be above 160, though that is about a 100 pip stop loss. Day traders can be looking for long opportunities here, but I want to stay with the trend. I will rather wait for the selling opportunities. Those are the 5 ones that I'm looking for. Please remember tonight, 7 o'clock mentorship. All right, everyone, keep well. Bye-bye.